Ever feel that familiar pang of dread when tax season rolls around, especially when you're knee-deep in the world of crypto? You've been diligently buying, selling, perhaps even staking or swapping on Wealthsimple, and now the thought of deciphering all those transactions for tax purposes is giving you a headache. You're not alone. The complex and often confusing nature of cryptocurrency taxation can be a major hurdle for even the most seasoned investors. But what if I told you there's a way to significantly simplify this process, making crypto tax tracking in Wealthsimple not just manageable, but almost, dare I say, easy? That's precisely what we're going to dive into today. We'll unravel the mysteries of crypto tax events within your Wealthsimple account, exploring what constitutes a taxable event, how Wealthsimple helps you track these, and the best practices for ensuring you're fully compliant with tax regulations without losing your mind. Forget the days of frantic spreadsheet scrambles and last-minute panic. By the end of this video, you'll have a clear roadmap to confidently navigate your Wealthsimple crypto taxes, leaving you more time to focus on what you love, whether that's researching the next big altcoin or simply enjoying your hard-earned gains. Let's begin by setting the stage. Cryptocurrency, despite its decentralized and often borderless nature, is very much subject to taxation in most jurisdictions, including Canada where Wealthsimple operates. The Canada Revenue Agency, or CRA, views cryptocurrency as a commodity, meaning that when you dispose of it, whether by selling it for fiat, trading it for another crypto, or even using it to buy goods and services, you're generally triggering a capital gain or loss. This isn't just about making a profit, even a loss needs to be reported, as it can be used to offset gains. Beyond capital gains, there are other ways you might generate taxable income from crypto, such as through mining, staking rewards, or receiving crypto as payment for goods or services. Understanding these fundamental principles is the first crucial step in effectively tracking your crypto tax events. Now, let's turn our attention to Wealthsimple itself. As a regulated platform, Wealthsimple understands the need for its users to comply with tax obligations. While they don't offer tax advice directly, and it's always recommended to consult with a qualified tax professional for personalized guidance, they do provide tools and reports to assist you in compiling the necessary information. This is where our journey into tracking crypto tax events in Wealthsimple truly begins. The core of your crypto tax tracking within Wealthsimple lies in your transaction history and the tax documents they provide. Think of your transaction history as the raw data, the complete ledger of every single crypto-related action you've taken on the platform. This includes buys, sells, trades, deposits, and withdrawals. To access this invaluable resource, you'll typically navigate to your Wealthsimple account, find your crypto account section, and then look for an activity or transaction history tab. On the web version, it's often under the activity menu at the top. On the mobile app, you'll find it under the activity tab at the bottom. Here, you can filter by different types of transactions, accounts, holdings, and timeframes. It's highly recommended to periodically download this full transaction history as a CSV file. This CSV is your golden ticket. It contains all the granular data points you'll need, like the date and time of the transaction, the type of transaction, buy, sell, trade, the crypto asset involved, the quantity, and the price at the time of the transaction. This level of detail is absolutely critical for calculating your adjusted cost basis, ACB, and your capital gains or losses. Speaking of adjusted cost basis, this is arguably the most important concept in Canadian crypto taxation. Unlike the first in, first out, FIFO, or last in, first out, LIFO, methods often used in other countries, the CRA generally requires you to use the average cost method for identical properties, and this applies to cryptocurrency. This means that every time you acquire more of a specific cryptocurrency, you average out the cost of all your holdings of that same cryptocurrency. When you sell or dispose of some of that crypto, you use this average cost to determine your capital gain or loss. While Wealthsimple's generated reports aim to simplify this, understanding the underlying principle of ACB is paramount, especially if you're consolidating data from multiple platforms. Beyond the raw transaction data, Wealthsimple also provides specific tax documents to help you. The most important one for crypto is often called the Realized Gains and Losses Report or the Crypto Transaction Summary. You can typically find these by logging into your Wealthsimple account, heading to your profile or settings, then looking for a Documents or Tax Documents section. Under Filters, you might need to select your crypto account and then choose Crypto Realized Gain Loss Report or Crypto Transaction Summary. These reports are Wealthsimple's attempt to summarize your taxable events, breaking down your adjusted book costs and your proceeds of disposition. However, it's crucial to understand that these are assistive documents, not official tax slips like T4S or T5S. This means the onus is still on you to review these numbers, double-check them against your own records, and ensure their accuracy before filing. The CRA does not issue specific tax slips for crypto, so these internal Wealthsimple reports are your primary resource directly from the platform. Now, let's talk about connecting Wealthsimple to dedicated crypto tax software. This is where you can significantly streamline your tax preparation. While Wealthsimple provides its own reports, these often only cover your activities within Wealthsimple itself. If you're like many crypto investors, you likely have transactions across multiple exchanges, wallets, or even DeFi protocols. This is where specialized crypto tax software becomes indispensable. Platforms like CoinLedger and Coinly are excellent examples. Wealthsimple has integrations with some of these services, particularly Coinly. This integration can automatically import your Wealthsimple crypto transaction data directly into the tax software. The process typically involves logging into your Wealthsimple account, navigating to the Tax tab, then Crypto with other exchanges, and finally selecting the option to import gains and losses. You might be prompted to sign into your Coinly account from there. Once linked, these platforms pull in your transaction history, apply the correct cost basis accounting methods, like the average cost method for Canadian users, and then generate comprehensive tax reports that are ready for filing. These reports often include a capital gain summary, an income summary for staking rewards, mining income, etc., and an overall complete tax report. With that said, thanks for watching, and until next time.